Do you want to grow an account quickly? Maybe you want to grow it by 20% within a week's time. I mean, there's people out there doubling it in 24 hours or whatever. But, I've done it in 7 days. I've had one trade that has added about 20% to my capital, which is really fantastic. And I'll share with you exactly step by step how I've done it and how you can do potentially the same thing. My name is Joachim Jere, and this is Clear Trades. Let's get started. So let's head over and do a screen share so you can see what I'm going to share with you and make it all visual and nice to understand. So here we go. This is my FX book. I have hooked my account to this so you can see it's a live account. You can see the max drawdown I've experienced is 41%. I've since then recovered all of that, and I am up 32% on the account. The growth target for this is a double. You can see here, this week, I have made 22.49% on the gain, and I've made 579 pips, 1,220 bucks on the account, which is all pretty nice. Anyways, let's go over here. This is my Telegram channel because this is where I am sharing all of my trades. You can check the link in the description below. And you can come in here. I've shared the setup for GU as he was setting up. So people who were in Telegram channel and wanted to follow it could have entered it as well. Anyways, here's my entry. I had 2 entries on this. You can see I got in really much at the top. And here as well, I got in really nicely. It's on the M5. I like to find my entries on the 5-minute one. And here's the setup and how it looked like. So let's go over how I've identified this setup. And then I will go over the strategy and how you could do the same thing. Now, I do have to warn you, trading is risky. Most people lose money, and it's usually a bad idea to go in with a large amount of capital or any capital at all if you have no experience. Better to start with demo. So anyways, here is GU. This is the trade I have taken. Let me give you a quick breakdown on my analysis. You can see here it's been respecting this trend line pretty well. You have 2 touch points, 3rd touch point got respected as well. 4th touch point, which is where I shorted, got respected again. So part of my analysis was looking at that and saying, okay, if it comes back here to this trend line, I'm going to go short because it seems to be having reversions at this trend line. Obviously, a trend line is not some kind of magic wall that's going to hold back a currency pair to go any higher. You have overshoots, which have a high likelihood of reversion, about 75% revert. If they have an overshoot, they revert back into the channel. By the way, where do I take the statistics? That's from Albrook's. I've never actually gone and checked it myself, so take it with a grain of salt. But that makes me fairly confident that this is a good place to place a short. If you look on the daily, you can see the channel on the daily as well. If you go on the weekly, just to give you a little bit of context here, you can see how we have this level here, which was a resistance zone before. We're getting into here. Why am I sharing this? Because I like to go for confluences in the market. I didn't go to the weekly chart, but that will be another good confluence to see in this trade, that this might be a good idea to enter a trade, a valid trade idea. All right, so I have this idea. I'm waiting for it to actually get up here. I know people have started shorting before that. I didn't because I wanted to see a new high. Now, one thing that I was a little bit skeptical about, because not everything in a trade is usually perfect. One thing when you look at is when you look at the average pip difference from here to here, the height to the new high is 190 pips, something like that. And then from here to here, you got 220 pips. So you got 190 and 220. And when you go from here to here, it's only 160 pips. So it's a bit smaller. Other thing is this leg here is fairly large. This here is not as big. So when it got up here, I shorted it twice. Once I got out at break even, the other time I stayed in it and I added to it. First time I shorted it up here, I woke up, I was like, oh, this thing's going to go down. I shorted it, it went down, but it spiked up, which is better visible on the 1 hour. It sold off really nicely. It spiked up. On this spike up, I got out at break even. It sold off. I was like, oh my God, I just missed this great trade. It's going to plummet to my take profit, and I'm not on board. But that's not what happened. What happened is It just simply broke this trend line here. You can see 2 touch points. You would like to better see a third touch point, but for me, it's good enough. It sold off pretty strongly. This is on the 4-hour. You start to see gap bars, which you have not seen before, meaning that the bars are closing below the moving average. No wicks is touching it. You have about 3 of them gap bars, which is indicating to me that this is starting to slow down. The pattern is starting to become larger, meaning you have this pattern to here, which I've measured up at 56 bars, and you have a pattern from here to here, it's about 26 bars. And according to Al Brooks, you have, that is a good amount of bars to have before a pattern reverses. So about half the amount of bars of how much this leg was before you can have a swing down. This obviously isn't always the case. You can have something where it comes up, it kind of has a head and shoulders and it sells off, or it just goes up and it sells off. Same thing here. You kind of had just a top and then it just sold off. But that was not what happened here. But for me, I get more confident. I get a break of a trend line. I get a resumption trying to resume the trade. It's failing up here. I'm entering again here. The risk to here is about $500, and then it's kind of stalling here. I get a second position in at the yellow line here. This line here, it's a second position. I entered on the 5-minute. The first one as well, I entered on the 5-minute. I like to snipe my entries. So I have 2 positions open. The total amount's a bit more than $1,000 up here, the loss, if we were to go there, because it's a 1-to-1 risk-reward ratio. Anyways, and then it goes here and it kind of starts selling off. I was thinking we're going to get a 50% retracement of that sell-off, which I would add another position and then go in. Because when you look at the previous sell-off, you can see how it kind of went down and then just spiked up, which was my entry, and it sold off. I made only $200 on this instead of like 1,000, which is really unfortunate. But this is not what happened here. It sold off really strong, and I didn't expect such a strong sell-off so quickly. But it's trading. You never know how it's going to go. Here you can see how I thought might be the 50% retracement. By the way, you can come and join this Telegram channel if you're interested in how I manage my trades. There, I'm sharing some other setups that I'm looking at. And then I closed it somewhere down here. Where is it? Here. So I closed it beyond my take profit. I didn't have my take profit in the system, very simply because I thought it would go a bit further than what I have originally planned, and I want to be a bit more dynamic in my trade management. So I got out here. When I got out, I even mentioned I think there's a good likelihood that there's a good chance this will go lower, but I want to secure my profits here. This is the biggest trade of my career at the moment, so I want to secure my profits. I could have made another, I don't know, $300-400 maybe on this if I would have closed it somewhere here, which is a good place. I think I would have probably taken it here, the profits, because it starts stalling and whatever. So but anyways, yeah. So this is how I managed this trade. I made a good amount of money. I made $1,080, I believe, on this. Here you can see it. $1,085 I made on this trade. Very nice trade. 7 days and 20% gain on the account. I had another trade, which is UJ, that has added another $150. So that's why I'm about 22% up on the account. So anyways, this is the breakdown of the trade, my analysis, the confluences I looked for, the different approaches I have used in terms of, looking at a move up. And, it has just this really nice market structure of making a high and then retracing, making a new high and then retracing. So it's just very likely it's making a new high, it's going to retrace. So, there's different ways of looking at it. I hope that was helpful. Now, let's go to you, and how can you implement this? Well, the first thing I want to say, it is probably a good idea not to do that. Okay. Why am I suggesting that you don't do that? I'm suggesting that you don't do it because if you are a beginner and you have no experience trading in the markets, doing something like this is a good recipe to lose your account. I don't take a trade and put 20% of the account at risk on every single trade. I take quite a lot of trades where I only take 2% of risk or something like that. I have increased the risk a bit more because I've gotten more confident with some of those setups, but I'm still not putting 10, 20, 30% of the account at risk because it makes no sense for me to do that. Only when I have a setup that I believe has a high probability of working out, do I then look at increasing the risk. I have seen these kind of setups to play out over and over again, and I have not gotten the profit I should have gotten because I chickened out of it, I mismanaged it, I didn't do a good job. But I had the evidence that my calls were good. So this time I was like, I'm going to stick to my guns. I'm going to go in heavier so that I actually can benefit from my analysis. This is on the higher time frames. You can see it on the 4-hour, you can see it on the daily. These setups, in my opinion, have a higher likelihood of playing out than something on the 5-minute chart. Yes, I used the 5-minute to find my entry, but I'm looking at the higher time frame for a high probability setup. So find your high probability setups, confirm them by actually forward testing them on a demo account. And then once you have confirmed on demo account, test it on a small account. Once you have done it on a small account, you can add more capital. But don't go in, with all your trading capital. I'm not in with all my trading capital. I'm in with a small percentage of my trading capital. If this were to go wrong, I wouldn't be screwed. It's totally okay. If I were to blow the account, I'm totally okay. I'm not screwed at all. And so you need to manage your risk before you even open an account, or while you open an account, by how much you put in. And that's when you can risk a higher amount, because it's not going to mess you over. If it doesn't go well, you're still okay. Really important to know that. So first step, find your high probability setup, back test it on TradingView, forward test it on demo, do it with some small capital, and see the evidence for yourself. Once you have the evidence, I had evidence on CHF-JPY, on AUD-JPY, on EA, on GBP-CAD, on GBP-USD, where I have seen these setups. I start executing on those setups. I've mismanaged a good amount of them, and I didn't end up making a lot of money on it because I wasn't as confident in my setups back then. Now I'm scrolling through, and that's why keeping a journal is quite useful, because you scroll through it and you're like, oh my God, this worked out, and this worked out, and this worked out, and this worked out. And I didn't make as much money as I could have because I chickened out or I mismanaged it for various reasons. Knowing this gives you the confidence that when you see a setup like this again, you're like, wait, I know this. This is like the other setups. It is not an A++ setup, but it's a decent setup. If we were to go to GBP CAD, let me see where GBP CAD is. I know my massive list here, which has a lot of all the pairs on it pretty much. GBP, CHF. Anyways, yeah, I'll go. For some reason, I don't have it here. Should have it here, but I don't. GBP CAD, which is setup I've shared, by the way, as well. I wanted this to go up all the way here. That would have been so nice. Here, sell off, quick spike up, go in here heavy. That would be a very nice overextension for me. Like, look at how that would have gone. That would have been really highly overextended, and a reversion would have been quite likely. That would have been an even better setup than GU. But that didn't happen. I didn't enter this trade, and I'm not in it, and I'm not making profit on it. But GU was a decent setup. You can see if I go to some of the other setups, like CHF-JPY or AUD-JPY, which I have shorted. Like, I shorted this thing. You can see up here. I shorted all the way up here. I shorted somewhere here. It wouldn't have gotten to the stop loss, and you would have sold off. But I didn't make money on it. I didn't make money on it because I chickened out. Look at that, how it would have gone. So anyways, so I've seen all of that, and I've seen how these setups have a tendency to work out. If you have a big enough stop loss, you have the experience to manage it, you are likely to make money on these. Not everyone is going to work out. There was one setup, EA, which really went against me. I managed to get out with a small loss compared to what I could have lost. I shorted it too early. I start shorting it somewhere here. It spiked up all the way here. I managed my way out. And I was able to enter up here, but I didn't enter heavy enough because I didn't have the confidence. If I would have entered heavy enough, I would have made up back all my losses and then some. But I didn't have the confidence, so I wasn't able to capitalize on this. And so you scroll through, your history, and you're like, oh my God, there are all those setups, and I'm looking at them, and they are working out, and they have some of them have really major reversions. and I'm not on board, or I have made a smaller amount, like here I went out, though I still think that was a decent decision. But if I would have just held through it, let it get back to here, be okay with potentially having some drawdown on it, and touching the line again and manage it that way, that would have been fine. They would have been better options than what I have done. So anyways, so once you have actually the high probability setup, you have seen it play out, then you are ready to actually risk a higher percentage. You can also just start with a small percentage. And then once you have it confirmed and you have done it a few times and you see, yes, this works, then you can go heavier, and you can go heavier with a smaller amount of capital, not your entire amount of capital, okay? As I said, trading is risky, and doing something like this can be risky. I personally believe you are not well off sticking to 1 or 2% on your account as a risk management. I think that you should, on the vast majority of your trades, have a small risk, but you should have a dynamic risk management and size appropriately on the opportunity. But that only comes with experience. So you can't, at the beginning, it is best to just stick to 1 to 2%. And for some people, it is best to just simply stick to 1 to 2%, and that's it. Because some of them, they won't be able to psychologically handle this, that if they risk a higher amount. But you're not going to make a lot of money having not some kind of dynamic risk management. At least this is how I view it. This is how I've seen some of the traders I look up to handle it as well. You can let me know in the comments whether you agree with it or not. Trading has no set rules. You make your own rules, and you have to live with the consequences yourself. No one else does. So anyways, for UJ, I'll go real quick over it. I had 2 UJ setups. Here's UJ. It's spiked up. I wanted to go short here, UJ, and it broke out. And I'm like, I'm going to go long. It broke out. I didn't catch this one up. But here I was like, I think I'm going to have a measure move up from here. And I think, especially on the 1 hour, it had like a nice big candle up. I was like, I think I'm going to have a measure move up just to make it a little bigger. You can see the stop loss is down here, and then we go all the way up. And this thing just freaking took off. I mean, this on the 5 minute, you can see I went long here, and it went down, and it just started going up, going up, going up. And I closed it somewhere here. It would have gone all the way beyond my take profit if I left it overnight, but I didn't. I didn't plan to leave it overnight, but it was a really good trade, and a trade that I could have actually added to it because there was a good amount of momentum in this trade as well. And then I have another trade open, another UJ trade at the moment. It spiked up really far. I was like, there's probably going to be some kind of follow through. And there wasn't really much follow through. I still think there's going to be follow through next week. You can see I've added to it and then just basically went sideways. If we go to UJ real quick, so you can see, I was like, if there's momentum, I'll add to this. And I was hoping we get follow through like the previous trade, but we didn't. So here is the 4 hour. We'll go on the 1 hour. Here, this is I was looking for a 50%, or this is a measure move up from here. So somewhere up here is a good place to take potentially profits. There we go. I'll just get rid of it. I was looking for a potentially 50% retracement and add to it. So I didn't go super heavy in it. The thing like $75 to the stop loss. So you see, I'm sizing appropriately. I'm not sizing appropriately in terms of, okay, let me go 15 minutes. So, or 5 minutes, because I probably enter on the 5 minute. I saw this big bar up. I'm like, we're probably going to see a fall through, but it's a huge spike already. So you have a huge spike like this. I thought we were going to get a move up, but it was on Friday. So I just left it open. I'm having my stop loss at break even. There's a good chance I'm going to get stopped out, and then it might go up to the profit target. I'm totally fine with that. I'm risking only $75. Why? Because if there's a 50% retracement before it goes up, I can add to it. If I have like $200 to the stop loss or whatever, I'm going to add to this, and then it goes all the way down. I'm going to start losing a lot of money, which is not good. So on these kind of trades, I am not going to go very heavy in it because I need to have the room to manage it. I'm still going to make some kind of money. It's 1.15, so maybe $100 if I'm not going to get stopped out. So we'll see how this trade plays out. Anyways, this is pretty much it. As a short note, I'm also considering buying myself a challenge for a funded account. I've done some research on it and I'm still undecided whether it's a good idea or not. There seems to be a bunch of issues with traders not getting paid out and having other things happening. I might have not to be able to post my trades in the Telegram channel if I were to do that, because they are going to say I'm, selling signals or something like that. So yeah, we'll see how that goes, whether I'm going to do it or not. If you have participated in the funded challenge, let me know what your thoughts are. I'm looking at FTMO at the moment as a potential way of doing it, but yeah, we'll see. Anyways, this is pretty much it from me. Hit the subscribe button and the like button, share with other people if it has been useful for you. I have endeavored to create this channel to document my journey so you can see what it really takes to become a profitable trader, to share my ups and my downs. As you can see, I have lost 40% on the account. That was before I started the YouTube channel, and I've recovered since from that drawdown and I made profit. So that is really quite nice. But there's still, guarantee. I might blow this account, I might do something stupid, and I'll be here telling you about it. As I have done before, I have told you about my stupidity of opening a trade at 3 a.m. in the morning. Anyways, I wish you a beautiful Sunday. Take care, and I'll see you in the next one. Bye-bye.